Tēnā koutou, welcome to this Summit Series session on Foreseeable Future, a seamless integration of data to enhance climate and disaster risk reduction. I'm Mania Sweeney with Tonkin and Taylor and be taking you through today. And as Tony mentioned, please feel free to add questions in the chat as we go, and we can come back to those at the end. Thought I might just quickly introduce our speakers for today. We've got Bapon Fakrudin, one of the technical directors at Tonkin and Taylor, and he will kick things off by sharing the concept of today's topic. Then we're going to hear from Breakouts, CEO of Hsbc New Zealand, who will cover sustainable business and climate actions. We've got Tim Grafton, the CEO of the Insurance Council of New Zealand, to discuss climate change, disclosure and insurance and the need for data. And Ilan Noy, a professor at Victoria University of Wellington, who will answer what is the common factor of DRM, ND, LD, SDG and Tcfd. And he might win the award for acronyms in his presentation. And look, I'll wrap up our discussion with providing a perspective on Māori Indigenous knowledge and engagement to enhance data gaps and risk assessment. And we'll open the floor to questions and answers after that. So thank you everyone for joining us today. I've heard there's been a few technical difficulties, so it's great to have you here. So we'll get started and I'll hand over to Bapon.
Thank you, Mania, for the introduction. I'll go through the overall concept of this foreseeable future. What does it mean to us by a seamless integration for data enhance for disaster as well as climate change risk reduction? Obviously, the effect of climate change and extreme weather event is more apparent nowadays. And also you may see that as the COP26 is coming in November, there has been so many overwhelming information in our social media on the climate change, its impacts, several reports, thought process. But however, you may agree with me that we often actually struggle to drive what does actually it means to us, to our business or to our community. It is one thing to understand that our climate is changing, but it is completely different matters knowing exactly what does it actually means to us, what risk it's likely to face, where and when it's going to strike, and also how we can actually adapt to minimize them. So neither any traditional hazard assessment, or if you look at our current climate change risk assessment, or even the Tcfd processes, they are not actually designed to anticipate the near-term climate-enhanced extreme event, like the recent heat wave in Pacific Northwest, a couple of flood events in New Zealand, and biggest flooding event in Europe. There has been several wildfire in Greece, Australia, as well as California. This indicates that we are actually missing some of the puzzles to look at the overall picture of our risk assessment. A different time scale, weather, water, and climate information is essential actually for our better decision making, allowing our user the opportunity to put some appropriate prevention mechanism. If you look at this particular slide, we try to put there is obviously a quite complex relationship between the climate change as well as sustainable development in our region, as it demonstrated a sort of cascading effect exerted by the climate change parameter like carbon dioxide concentration, ocean acidification, land and sea surface temperature, sea level rise, and as well as extreme weather event, how actually this is impacting our various sector. With the key impacts. And maybe whoever actually listening today, you maybe agree with me that this is not an uncommon, and everyone knows that climate change has a potential impact on our sectors, and it maybe sounds like a broken radio, but indeed, if you try to understand actually what is actually driving this understanding, this impact, which is actually data. And if you don't understand our data systems, it's actually not able to provide us to understand what are the major consequences it could create. Obviously, the COVID-19 is a good example for every one of us to better understand that how it gives us an understanding that every discipline which need to understand the complex and difficult problems require a rapidly accessible and actionable data. and opportunities to how the machine learning, the big data system is also quite progressing. In that particular regards, our technology has been actually quite advanced rapidly, but our data management system is not quite achieved in that particular pace. Although there are several data exist, they are typically disparate geographically, owned by various entities, as you can see, the government, expert, TRR, researcher, private sector, general citizenship, volunteer organization, as well as insurance organization. Everyone has actually different accessibility as well as read and write power of the data management systems. So it needs to have a holistic, proper management systems and an integrated manner to better understand this data ecosystem. And as you can see that as we are all actually running to reach to the 2030 global agenda for sustainable development goal, there are Sendai reporting, there are Paris Agreement, and all this framework is actually quite need to be accountable for any countries who actually sign those kind of agreement to report back to UN or report back to their own organization. Actually, what does it mean and how we actually measure those data. Where I was listening to the previous session, they're actually quite well described also that how actually we need to measure the data. And if we just look at an example here, the data ecosystem for Sendai Framework, which has a quite rigorous S7 target, and then how the 7 target need to be look at all these gender disaggregated data to be accountable. And the purpose of this is to how we can actually make sure that we have a quite good data management system for our risk assessment. And it has a quite strong linkage with the Sustainable Development Goal data. But often we see that the data management systems creating a quite complex because of the organizational mandate and as well as our silos working nature, because of each of these frameworks is actually managed and mandated by different agencies, and there are actually quite a lack of interoperability, accessibility, and making them difficult to access and utilize for research, assessment, as well as aid policy decision making. Now, going back to the climate science and risk evaluation, or a foreseeable future, what does it mean to us? We work together with our clients, providing impact assessment for weather, water, and climate information over the past 2 decades. And this work has demonstrated us the powerful information to how we can actually develop some risk-based decision-making, as well as proven and potential use for understanding our future risk, and with a different time frame in a short, medium, and long range. And that could actually help us to better understand our, not only the transitional risk, but also our physical risk. And a collaborative platform is quite essential to drive this kind of information into different time scale. So when you're looking at the emission scenario from the climate change, there are actually, the climate actually driving a lot of various time scale scenario, which is short range, medium range, extended range, annual, as well as up to 30 years to century, and integrating those into our other kind of vulnerability and exposure information together with the institutional and legal framework, market, and technology. It could help us to understand the physical risk, to look at the more financial implication for entities as consequence of direct damage, or maybe an indirect impact from supply chain management, or maybe looking at more on the policy level risk, litigation risk, technological risk, reputational risk, or regulatory risk, and how that could drive us to better understand our loss modeling, to potentially understand our financial implication, and that could drive to better understand our supply chain disruption, physical damage, and asset management, change in resources, or what are the demand and product. And that could probably help overall for any sector or any individuals to understand and mitigate and develop their adaptation option. So as the climate-related financial disclosure is approaches, the importance of accurate and timely climate data for decision-making is quite increasing. And at the same time, different climate impact do not necessarily occur in isolation, so that all these extreme events are quite well linked with the climate change. And so that we need to actually look at more on integrated platform where actually gives us a extreme weather event as well as climate change to better understand our disaster risk reduction as well as climate change impact, to our society, as well as to our industry, as well as an individual. I think that's all from my side. And thank you so much for listening, and happy to take any question or comments you may have. And this is one of the final examples that how actually the seamless integration could create an impact. There are a lot of examples throughout the globe that how actually the hydrometeorology that has been defined using this climate change information to better understand our decision-making process. Thanks, everyone.
Great, thanks, Bapon, and thanks for highlighting the importance of data management systems, both for accessibility and data integration between entities, and also those examples you provided, I think, around how that can be applied across supply chains and sectors. So really appreciate it. I'm very excited to introduce Burku up next, and we'll hand it over to you, and maybe Bapon will get you to stop sharing at this time.
Thank you. Thank you. Kia ora, everyone. Thank you for the opportunity to be part of the panel and this very timely summit. Just to introduce myself a little bit further, I've recently moved to New Zealand about 6 months ago, and to start my role as the Chief Executive of Hsbc New Zealand. But before then, I've had the pleasure of driving sustainability for Hsbc's global trade and receivable finance business globally, with a focus on supply chain sustainability, being based out of London for about 3 years. And whilst I'm joining today with my new hat on as the Chief Executive, I will try to do my best to bring some of the previous international experience in and share with you some different perspective about what we're seeing as Hsbc from overseas. I think my angle, so as you can see, I don't have any slides, I'm going to kind of talk through, but I think my angle here really is to add a practical perspective from Hsbc Group's perspective based on the conversations we're having with clients, with investors, governments, regulator today, and to go through Hsbc's commitments, just to showcase a practical example about how we went out to the market and the targets that we have committed to achieve by certain dates. So for this audience today, there's potentially no need, obviously, to emphasize the importance on sustainability, but what's important is to emphasize the need to act now and how we strongly believe that COVID-19 has served as an accelerator to increase the focus on this topic. It was an important topic before COVID-19 as well, but COVID-19 certainly sheds a very close light, showcasing that what a global event can suddenly do to our business models, to our resilience, to supply chains, and simply to our lives. It also proved that when needed, businesses can act quickly and decisively in moments of huge pressure, especially around a common goal. So potentially, since I have moved to New Zealand just a couple I suppose weeks ago, maybe a month ago, the most recent significant development in sustainable space globally has been the report released by UN's Climate Science Body, the IPCC, so the Intergovernmental Panel on Climate Change, is the first in a series of reports as part of its sixth assessment cycle. And whilst the report was delayed, again, by COVID or due to COVID-19, it did incorporate updated science from the past 8 years. And I'm sure many of you are quite familiar with the report, but it did offer the latest estimate on how much the climate has changed, how much more the climate could change in the future, and the risks across various regions, and whether limiting further change is actually possible. So one of the key messages that changes have been observed in every region and across the whole climate system, which is quite in line with the number of conversations or the increased interest that we're seeing across the world. It has simply been yet another wake-up call for governments to set ambitious targets, credible climate targets that cover both the mitigation and adaptation, along with policies that can be implemented ideally as soon as possible. Although I'm quite new to New Zealand, I feel quite fortunate to be in New Zealand, with New Zealand being one of the leaders on the regulatory side in sustainable finance, by being the first country to make Tcfd requirement or legislation a law in the world. But to make that change globally, or to make that transition possible, potentially it's important to take a moment to emphasize the role here of financial institutions, or the role of sustainable finance, and what we're doing on sustainability as Hsbc. Just taking a step back, again, in a very simplistic manner or straightforward manner, financial institutions intermediate all capital flows, and therefore finance or sustainable finance has a very important central role to play in the transition to a net zero economy. And we are one of the world's largest banking financial services organization. So we are quite cognizant about the role we have or we play, as well as the responsibility we have to drive this change. In that context, towards later in 2020, we at HSBC Group announced our new commitments on sustainability, and our new commitments had three main pillars. So one pillar was HSBC becoming a net zero bank. The second pillar was HSBC supporting our customers. And the third pillar really was the HSBC supporting the market to unlock new climate solutions. So I'm going to try to go a little bit deeper in each, just to give you a little bit like light about what we mean with each of the pillar. So HSBC becoming a net zero bank basically is we're trying to align so we aim to align our finance emissions to achieve net zero by 2050 or sooner, and be net zero in our own operations and supply chain by 2030 or sooner. And we will do that by using the Paris Agreement Capital Transition Assessment Tool. We have started doing so, and we're going to continue to make regular transparent Tcfd disclosures to communicate progress. And we're going to collaborate to establish globally consistent standards as and when they become available. The second pillar really is the support that we can provide to our clients. So we have communicated to the market that we're going to provide US $750 billion to 1 trillion of financing and investment over the next 10 years, which is a much more bolder or larger commitment than what we had previously. And it does cover the emphasis on transition, including the supply chains or the transition that need to happen in supply chains as well. We've also have communicated and also established a dedicated ESG solutions unit based in Hong Kong, but with a global mandate across all the regions to support our clients on their journey to lower carbon emissions. And the reason why we established this unit is we strongly believe that a lot of the solutions that we're going to see or we're going to help our clients with are going to come through co-creation and co-partner with our clients. So we're really trying to put the sustainability goals at the center of our clients, at the center of our discussion with the clients, and really trying to co-create or innovate solutions that are actually catering to those sustainability goals, rather than thinking that we have a solution out of the shelf and it will apply to all situations. The third pillar really is the unlocking, what we call like the unlocking new climate solutions. And this is more kind of like the responsibilities or like the emphasis on innovation, where we strongly believe that we've carved out a philanthropic budget to be able to scale climate innovation ventures, as well as we are constantly innovating in emerging technologies or emerging sectors like clean tech or fast infra. And we're constantly collaborating with other players in the market with a partnership model, just to be able to advance the topic and the theme around sustainability. And again, just from an HSBC perspective, most of you might be familiar with HSBC globally, but we serve more than 40 million customers. We operate in 60 plus countries. And just within HSBC globally, we have about 250,000 employees globally. So it's a quite sizable platform that not only gives us the scope and the breadth, but also the depth and the experience to play our part. Whilst we have went out to the market and committed those three pillars that I've just kind of briefly kind of scanned through, we have also, we are doing quite a lot actually in advocacy and thought leadership. So our HSBC Group Chief Executive, Noel Quinn, like in London or kind of from the UK, is like representing HSBC as a founding member, established the Net Zero Banking Alliance and the Glasgow Financial Alliance for Net Zero, co-launched in 2021 by the United Nations and the Financial Services Task Force of the Prince of Wales Sustainable Markets Initiative. We work a lot with governments or regulators or market associations to be able to establish standards or to be able to support consultation kind of responses to propose sustainable finance regulations. So the list really goes on. But I think the most important piece that it all boils down to is what we call like the use cases or case studies, just making all this effort tangible by us partnering with our clients, but providing a number of solutions that we call like a sustainable finance first to be able to help companies to achieve their sustainability goals. And these solutions range really from all the way from capital markets, from the bond, kind of a green social or kind of environmental bonds or governance bonds, to green mortgages that we've launched in UAE quite recently, or green deposits we've launched in Singapore and UK. So it's quite a I suppose kind of a big list, or like a long list of sustainable finance first. In all these, though, the common challenges around sustainability that I'm sure throughout the summit so far up until now, and even in the speech before me, we've kind of alluded to the common sustainability challenges do still exist around the need for global standards, both in terms of principles to protect us against the risk of greenwashing, as well as taxonomies, the need for better transparency, especially in the context of supply chain, the need to leverage data as an asset. And I like the emphasis, I think was in the previous session around kind of, it's not just data as information, but really the intelligence out of it. And we're constantly trying to work to create initiatives and invest into technologies that help us solve these challenges. And again, by engaging with government bodies and regulators to really advocate and move the needle. On the data front, what we're seeing is, or the broad feeling is, it is getting better, but it's still imperfect. And the rise in volume and quality of disclosure on ESG, climate, has really helped us, but there is somewhat of an acceptance that data can't always tell the full picture. So we really are trying hard to find the relevant indicators for a company or country to be able to identify materiality and relevance. Because in the space of sustainability, especially globally, it's quite difficult to assume that one size is going to fit all. As it stands, just as an example, for instance, markets are unable to systematically price the risk associated with green investment, which then certainly leads into higher cost, and I mean, which partially is due to the lack of data. And we're trying to kind of create initiatives and work to be able to actually move away from that challenge every day. One of the key uses that we're seeing around data is obviously around transition risk. This is quite at the forefront of, for us, like of many minds when it comes to climate change amongst our clients. Although it's worth noting that physical climate risk cannot be underplayed as well, especially in light of the recent IPCC report that I've just alluded to. The threat of disruption to existing businesses from carbon mitigation is a key talking point that we're having or we're seeing from the investor base with important topics such as the robustness or the achievability of corporate net zero goals. Will countries adopt meaningful pledges, policies at COP26? This is quite an important year with quite a series of important events, and once those decisions or meaningful pledges hopefully happen, who or how will the transition be paid for? So quite important questions, and we don't have all the answers to all these solutions, but the conversations are happening and are ongoing, and we're hearing more and more. On the disclosure piece, the financial regulators and stock exchanges in Asia region, just referring to Asia, given that we're kind of part of that region from an Hsbc perspective, it is improving and tightening, but the data quality is still slightly lagging behind Europe in general. We're seeing some jurisdictions in Asia, like China, Japan, they are moving the disclosure rules from voluntary to comply or explain or mandatory, or updating their requirements, like for instance in the case of New Zealand, making it a legislation. But there's certainly room for improvement, and if we look at the world data, half of the capital markets still require climate disclosure, so it's not fully penetrated yet. And there's also a lack of agreed standards. So it's one of the ironies that we come across of the challenge we currently face, that there is more green investment money around than there are certified green projects to invest in. And of course, the crucial word here is certified, coming back to the standards and the transparency and the alignment. We are also seeing a lot of emphasis on technology, and technology, we believe, is already doing some of the heavy lifting for us. For example, the cost of solar generation has fallen by 82% over the past decade, and we now have about 14 megawatt offshore wind turbines that generate enough electricity in a single rotation to power the average, for instance, Western household for 2 days. So I think a combination of all these elements, just maybe one line to just finish my kind of long speech, is time is clearly running out, but there is still hope, and we, both from an Hsbc as well as the finance industry perspective, believe that we have a key role to play.
Okay, thank you so much. There are a number of questions coming through for you that we'll come back to at the end. Sure. And keep them coming, everyone. That's great. And thank you for highlighting the role that financial institutions play for that transition to net zero. And the questions you posed around transition risk and the international trends in climate disclosure is really key. And I can see some questions coming through on that. Right. Looking forward to passing over to our next speaker. So Tim Grafton, who's Chief Executive of the Insurance Council of New Zealand. Tim, I'll hand it over to you to provide a detailed introduction of yourself. Welcome.
Tēnā koutou katoa. Thank you very much for the opportunity to participate in this panel. I lead an organisation that is, represents general insurers, that is not life or health insurers, but those that underwrite the risks for about $1 trillion New Zealand dollars worth of assets and liabilities in New Zealand. We have a long-standing interest as a sector in climate change. Globally, we face complex, systemic, interrelated challenges that require global answers. And of course, climate change is the exemplar of that because it affects every aspect of life on Earth. And if we don't get climate risk right, we will adversely impact all the SDGs. And importantly, and conversely, unless we tackle the SDGs, then failure with one will have adverse implications for the others. And 2020 decade is the decade of action to try and avert what could be a climate catastrophe. It matters to insurance because, like any other business, we are inseparable from the society we serve. And we underwrite and invest in businesses and activities. And clearly an unsustainable future is an uninsurable future. And insurance plays many different roles as a large investor, expertise in understanding risk, accepting risks from society to enable so much to occur in society. And we have global reach and the challenges for us to develop innovative products that respond to the challenges ahead. If we could go to the next slide, please, Bapon. So in the context of sustainable finance, we look at that as meeting the needs of today without compromising the ability of future generations to meet theirs, and particularly with respect to finance in terms of capital flows, risk management, and financial processes. And I'll just throw in there that over 800 billion US in green bonds and loans were out in the market in the first half of 2021. Actually a drop in the ocean in relation to the total capital that's out there. And there is a huge excess of demand over supply of investment quality green product, which is an issue. Green taxonomy, I just identify this because we here in New Zealand do not have an agreed and established taxonomy for what counts as green investments, and other jurisdictions have gone down that path. But it is important to know that what a particular entity is investing in or doing is actually something that is contributing to sustainability. And clearly across the ESG factors, environmental social governance factors, sustainability is absolutely critical. And this again relates to all of those SDGs in that holistic sense. We'll go to the next slide, please, Bapon. I'll just talk briefly about the Tcfd framework. This is the mandatory framework that a number of entities, including a number of our members, general insurers, and banks and others will be reporting to from about 2023 onwards. And just to run over this very quickly because I'm conscious of time. So basically the Tcfd framework provides four, I guess, areas in which disclosure is required. Disclosure in terms of the governance around climate-related risks and opportunities, going to the actual risks, the potential impacts of climate risks, as well as the opportunities that arise in there. In terms of the strategy, in terms of dealing with climate risk and how you disclose metrics and targets to show how you are managing those climate-related risks. The importance of this is that it's providing clear information, or as clear as information as possible, for investors to be able to identify which entities are ones that over the long term may become a higher risk, those that may become a lower risk, reflective of how well they are managing their climate change risk. So greater transparency is needed here. And clearly, in order to do this work, data is absolutely critical. So data fuels that level of identification of risk and also provides the insights for how we can address big issues like how we reduce risk, how we adapt. For insurers and for all those reporting, you have to report over short, medium and long-term periods. So that will mean that we will be looking at going into the long-term scenarios and climate change scenarios reflective of the representative concentration pathways as those identified in the recent sixth assessment of the ICPP. For us, we have to identify the physical risks that we face. That's what we underwrite. So, for example, flood-prone houses, the transitional risks that we face. So we are huge investors, and in terms of investments, what kind of changes may be made to the regulatory space or consumer behavior and demand that may affect the value of our investment assets. You know, the obvious one being that if you're heavily invested in black coal, you're onto a loser over the long term, and you won't be attracting a lot of investment capital. And then liability risk, which is one that's unusual to us because we underwrite our customers in terms of the harm that they may cause to third parties. So if a council did not make climate change related decisions that resulted in harm to others and we were underwriting their liability policy, we might face issues there. And can I go to my last slide very briefly? So the data is really critical for a whole bunch of reasons, as I've said, and on this slide here, I won't read them all out in the interest of time because you can glance through that, and I think it's self-explanatory. But essentially, you know, to understand what the future might look like, you need good data. You need good computational ability to develop potential future scenarios around which you can make those assessments of the future risks that you face. There's a lot of information to draw on about the likely future pathways. We're fortunate in New Zealand, we have the Climate Change Commission's report mapping out its expectations of what future governments will and should do and when they should do that. We will see in the course of the next 12 months, the National Adaptation Plan response provided by government. So again, that'll be another indicator of where priorities are being placed. Clearly, we have a regulatory framework around planning and use around the Resource Management Act, which is being replaced, and that will be important for ourselves as well. And then there's a whole lot of cost-benefit trade-offs that have to be calculated around sustainable investment. You know, mindful of the fact that if we go into a very rapid, unstable transition, unstable being the operative word, then we could result in having significant unemployment, which would impact SDG 1 poverty, and could lead to a slowdown in terms of political response to that, to achieving climate goals. So we need good data to provide greater transparency to inform decisions so that a smooth transition to a low carbon economy can occur. And obviously, as I said, we'll have consumer and community behavior and choices change over time, and we have to try and anticipate what that might look like. So Ngā thank you very much for that opportunity, and I'll hand over to Ilan.
Great, thanks, Tim. I'll give Ilan a quick moment to get organised and just say thank you. I took away a powerful sentence that you said around data fuels the identification of risk and also how we can adapt. And so thank you for providing that deep but quick snapshot of that. Ilan, over to you. Welcome.
Tēnā koutou katoa. Thank you, Manea, for leading us through this panel, and thank you everyone for listening in. Yeah, I'm going to refrain from using the acronym. So let's go on to the next slide, please. So my talk, what I want to emphasize is the link between disasters and extreme weather events and the sustainable development goals with a sort of a data lens to it. So next slide. So if you look at the sustainable development goals, I started by thinking, okay, which of those sustainable development goals are relevant for extreme weather events and climate change risks and disasters? And pretty much very quickly you realize, okay, you shouldn't be thinking which one are relevant, but actually which one are irrelevant. Next slide, please. So I only, no, previous one. Yes. So I only could think of 3 sustainable development goals which are not that tightly relevant to the issue that we're talking about in this panel. All of the other ones are, and this includes things like reducing inequalities. So inequalities are tightly related both globally and domestically within New Zealand or within every other country. Inequalities are very much affected by these risks that we have already been outlined by the previous 3 speakers, the climate change and extreme weather event risks. And if we don't have the data to inform us about those, then we can't really manage them very well. Next slide, please. I also want to point out that when we signed the Sustainable Development Goals Agreement in 2015, we also signed 3 other promises or international agreements. The 2 obvious ones are the Paris Agreement on climate change, which we, as the recent Working Group 1 report from the IPCC shows, we're not really on trajectory to abiding by. But we also signed the Sendai Disaster Risk Reduction Agreement in 2015. To give one example where we don't really are fulfilling the promises of these, every country in the world promised to evaluate its disaster losses compared to a benchmark, which is the disaster losses in the previous decade before the signing of the agreement. New Zealand is not really going to be able to do that because we have no idea what's the losses that we lose every year because of disasters. We don't have any accounting of the impacts of flooding events or drought events or other events like that on the New Zealand economy, and specifically on public resources and private resources. So we are far away from abiding by our commitments to the Sendai Agreement. We also signed the Financing for Development Agreement in Addis in 2015, in which basically every country, following on the previous promise and the Millennium Development Goals, promised to donate at least 0.7% of GDP to development assistance. New Zealand is very far from doing that. Actually, almost every country in the world is far from doing that, except I think three Scandinavian countries. So we are not on a trajectory to fulfill those promises, and therefore we should be worried about the Sustainable Development Goals as well. Next slide, please. So the focus here is on data, and I definitely agree with Bapon and with Tim that we need data, and without data we can't do anything. And I also agree with Borku that that data also requires the analysis of that data, and just data by itself is not really that helpful. We need the intelligence that is extracted from this data. But I want to, in the last sort of 2 slides in this brief comment, I want to highlight 2 risks here. One is that when we are analyzing the data, we're looking at past events, and typically we have a very short record. So, in some cases, maybe we have records of the last 20 or 30 years. In other cases, we might have only a record of the last 10 years. And if we base our analysis on the risks we're facing on those short span of records, we are missing the big risks. And we've seen that to some extent with COVID-19, but to another extent, actually, COVID-19 was also a failure of imagination, because we knew about the risk. We knew we had good records of, or semi-good records of, the 1918 pandemic flu. We knew that this kind of event can occur, and we completely missed it, and we were completely unprepared for it. So I'm worried, and of course, the main reason why the main and maybe the only reason why we are not going to achieve the sustainable goals by 2030 is COVID-19, because that has been a massive setback for our efforts. And I am worried that we are, by insisting on data, we might not be thinking also a bit outside the box. And so we need to complement that data with a lot of more imaginative scenario analysis that will able to point to us what are the big risks that we might be ignoring by looking at the very big data that we are flooded with at the moment. Next slide. The other thing I want to highlight is that data in itself, and even intelligence, is not good enough, because we have a lot of other reasons why we are not, even when we know the risks, and COVID-19 is probably a good example, even when we know the risk exists and we know that the most likely pandemic scenario that can emerge is a SARS-like virus or a coronavirus that will emerge out of China. We knew all that in 2019, we knew that in 2017 or 2015, we still weren't prepared for that. And that's because there's a lot of sort of what in economics we call behavioral economics, or you can call it behavioral psychology, reasons why people are not that prepared to deal with risks, and why we need to develop new ways and new methods to make sure that we are being prepared for the risks ahead. There's actually a recent survey done on to financial experts and financial academics, financial regulators, and financial market participants. That survey came out maybe 2 or 3 weeks ago, asking them about climate change. And the overwhelming agreement among those groups, all 3 groups, by the way, the academics, the practitioners, and the regulators, is that there are 2 main levers to make sure that TCFD and other things like that will have an impact. And one is tight government regulation, and the other one is consumer demand. So if consumers demand that companies, be that financial companies or others, behave in environmentally responsible and sustainable manner, that will happen. But without that, it's not going to, and that it's not going to happen. So for example, all three groups of participants agree that green finance is not going to make a difference by itself. Without strong government regulation and without that, for example, mandates very tight disclosures that bring transparency to this market, and without consumer demand. Without those things, this is not going to happen. And I think I'm done.
Great, thank you, Ilan, and thanks for highlighting timescales when we think about understanding risk as well as challenge, and just point to people online that if you haven't had a look at Ilan's research, but doing interesting papers there on climate change, migration, voice, as well as economic factors. So encourage you to have a more detailed look at that work. Thanks, Ilan. Look, now I'm going to talk briefly around Māori and Indigenous knowledge and engagement to enhance data gaps and risk assessment. And just wanted to start with a whakatauki and perhaps taking us more to the social side of the theme of our session today. Next slide, thanks, Bepon. With a whakatauki that says, te manu kai miro nōna te ngahere, te manu kai mātauranga nōna te ao. So that's the bird that eats the meadow berries, the forest is theirs, and the bird that eats, consumes knowledge, theirs is the world. And for me, this proverb is really about how the application and gathering of data does open up the world, and the ability for Indigenous knowledge to expand on that. Next slide, thanks. Some of you may have seen this before, and I think Steve in the previous session alluded to it, but I really like this Lego perspective on data and information processing, particularly when we think about inputs and outputs. So the process here of sorting, arranging, presenting, and explaining data is helpful when we think about every step of the process, and perhaps alluding to Ilan's comments on inequalities. Every step of the process we're at risk from creating biases or gaps, or equally we can think that at every step of the process we have the ability to think about how we can elicit different perspectives or Indigenous knowledge to inform our outputs for a more holistic approach to climate change matters and risk reduction. So I thought I might just use this as a way to conceptualize that. Next slide, thanks, Bepon, is influenced by this whare diagram as an output that we worked up alongside iwi to think about how we were going to inquire on climate risks. So then we could understand what information was needed in what areas. The whare, or the house itself, is an adaptation of Sir Mason Jury's whare tapa whā model, or the 4 pillars of wellbeing. And it provided a different starting point to how we could then amalgamate and gather information with mātauranga Māori or Māori knowledge. So mātauranga Māori, evolving from not just being the wisdom of the past, but recognising that in its contemporary forms also provides us with new innovative approaches for using traditional knowledge that represents the dynamic and evolving Māori world. What we found here applying this model is that specific communities, population, or knowledge sets may not be captured in historical data. And so it's important to think about the areas that might need to be backfilled in that regard. So here at the top of the house, rangatiratanga and kaitiakitanga, that governance realm, which for the iwi we were working with, reflected a commitment to the Treaty of Waitangi responsibilities, partnership agreements, iwi sovereignty. This provided a particular focus area for us to go gather information in that area to underpin how we looked at climate risk as it pertained to governance and leadership, so we could understand that in greater detail. In terms of, next slide, thanks, enhancing data-led decisions, we can think about different ways in which we arrange information in a more integrated approach. So this image is a model that we've developed for, this is the preliminary version of a model for an integrated approach to a regional climate change risk assessment. And it's actually adapted from Kate Raworth's donut economic model, for those of you that are familiar with that. The intent was to co-design a Mātauranga Māori and Western knowledge integrated approach. So the red circles the upper limit of society's survival with climate change effects. The black circle is intended to be the basic foundation of society's needs, and the green circle is where we want to exist as a society. And the words shown there were defined values that were identified by the community as important to this community to protect. So as an example, you can see why or water shown here. And previously, we may have assessed climate risk in terms of water infrastructure and natural water systems separately, but this model forced us to consider the interdependencies and cascading risks within that water realm because of the way it had been arranged. And this was an easier way also for stakeholders and entities, local government, to connect and understand those risks and adaptation that might be required across a very complex area. Next slide, thanks. In terms of presenting information on climate risk and reduction, I just wanted to flag that it's like starting with the end in mind, that the way that different groups receive information is important to consider when we're working with data right at the outset. So this graphic was developed to communicate climate hazards in a way that stimulated conversation. It was underpinned by substantial supporting technical information that people could access. But Māori is the dominant language shown here to engage with rangatahi or youth, with English intentionally harder to read, and mocked up in a way to engage the younger generation. And this also provided a two-way information flow for us to elicit information back from these communities in these particular areas, whether it was droughts and wildfires or ocean acidification, which proved to be a rather tricky term to work through a Māori term for. Finally, on my next slide, I just wanted to highlight the power of explaining complex information through story. And I think we've heard that earlier in a previous session. And it's an inherent part of Māori oral traditions and how we communicate. So as we focus on our own technical areas with our own data-centric systems, sometimes we can lose track of storytelling as a powerful learning pathway to unite us. And stories help us define the why, the what, and the how. But it's also a mechanism for us to reinforce and leave powerful imagery in the minds of the people that we're engaging with. Māori proverbs are historic, but also evolved generation to generation, which is why I really like this recent one from Te Wharehui and Milroy. E kore tātou e mōhio ki te waitohu nui o te wai kia mimiti rawa te puna. We will never know the worth of water until the well runs dry. And I think that's a proverb that reminds us all of the challenges that lay ahead, and one that I just wanted to leave us with. So kia ora tātou. I see some great questions coming through that we will come back to now. So thank you so much for, and I heard I was freezing. Thank you, Maria, for pointing that out. Hopefully I can pick up on any points as we go that you may have missed. I'd just like to come back to a question that Ben had for Burku. So does Hsbc in these offerings have anything to offer emerging businesses in New Zealand? Burku.
Yes, yes, for sure we do. I think every kind of request, obviously, coming back to kind of what I said in terms of putting the client sustainability goals at the center of the discussion theme, needs to be really evaluated case by case basis, like we always do. But every product or solution that has been established globally can be availed or will be availed in New Zealand, depending on the need that we see on the ground. I think it's a brilliant question, because one of the things that I didn't potentially cover is I've kind of talked through Hsbc's commitments, but we are part of something much bigger, as I alluded to, within Hsbc here in New Zealand. So all our commitments or all our actions are completely aligned, and everything we do are completely aligned to the group's objectives. So the answer is for sure yes, and it just deserves a quite close kind of discussion, a conversation to understand the sustainability targets, the goals, and how we can actually come in and support.
Thanks, Berko. One for Tim. Having just lost over 200 residential homes in the district, and this one's from Ben, when are the ICNZ going to disclose this 2023 framework to the public, and any indication of household expenditure in a high-risk environment?
I'd already written a response to that question about a quarter of an hour ago, but the Tcfd Framework reporting will be determined by the XRB, which is the standard setting body of New Zealand, and they will be providing a final standards to report to in mid-2022. The first consultation round on the governance and risk will begin next month. And then they will bring in the other two pieces, strategy and metrics, in February 2022, and moving to a final standard in July. So in terms of reporting, that will start coming through, as I said, from 2023, but the legal standard to which we must report will only be apparent when that comes through. So I hope I'm answering the question, but I'm certainly not trying to avoid the question. It looks like Ilan's got a comment to make on it too.
Ilan.
Yeah, I want to emphasize that it is incredibly crucial that the TCFD will have the right requirements of what needs to be reported and what is not. And as Tim said, that's not a decision that the insurance industry is making. That's a decision that the regulator needs to be making. And I'm sort of calling on the people who are on this listening in. If there is something you think you want to know about the way that the risks that need to be reported, then by all means make your voice heard. There's going to be periods for submission from the Ministry for the Environment, from the XRB, and so forth. And we need to make sure that indeed that reporting requirement doesn't become an exercise in box ticking, but actually provide something meaningful and useful that can indeed move us in the direction that we all want to move in, which is a more sustainable financial system that supports a more sustainable New Zealand.
Great, thanks, Ilan. Would anyone else like to add to that? Any of our other speakers? No. Thanks. I'd just like to go back. Earlier, Maria asked a question, one for you, Berko, around Hsbc's targets and alignment, and whether the bank will be adopting the upcoming net zero standards for target validation.
Under the science-based targets? Oh yeah. So, so my understanding of that is potentially it's quite evolving as well as we head into COP26. But my understanding is that the science-based targets, they ran a road test to help refine the tools, guidance, and criteria for the net zero standard. The results of which will be released in advance of COP26 in November this year. And the first version might be released or finalized in late 2021, at which point I'm sure Hsbc will carefully consider the results or the announcements in respect to the targets, but it's quite difficult to confirm at this stage without knowing what that road test or the final announcement is going to look like.
Great, thanks, Berku. And I should just say to participants online, if you haven't written a question in the chat, but you've got one that you'd like to pose to the panel, feel free to use the raise the hand signal, and we can come to you. I might just throw a question out there around drawing on thinking about climate and extreme weather risk, and perhaps one for you to kickstart Bapon, but any climate risk assessment or TCFD are not anticipating short-term weather or climate-enhanced extreme events like the recent heat waves, floods in Europe. Are the insurance industry or banks considering this at all? And I'll let Tim and Berku think about that while you give a technical view on that.
Yeah, I mean, that's obvious. Like when we actually looking at the climate change risk assessment, we always thinking actually quite far ahead. What is happening to 10 years, 30 years, or 50 years time frame? But you often actually try to ignore that what is happening out tomorrow, after 7 days or 10 days, or even after 1 month to 3 months or 6 months window. Obviously, it depends on the different stakeholders who actually wants to utilize those information on their decision making. Perhaps maybe some banks, they need to information annual year by year basis because of their credit loan perspectives, or insurer like to look at more on their insurance perspectives. But if you look at our sectors who actually take the decision, especially on the agriculture or primary industry, they actually need to know quite in advance that what is happening for next 15 days or 10 days or month or maybe a 6 month ahead, and how we actually able to operationalize those information into more impact oriented, so that could give them a quite decision making process. We don't see that quite often actually happening here in New Zealand. We see that product is there, information is there, but it's actually not usable or used by any entity, and how we can actually promote those kind of space is quite important. I think. And the other aspect is like, I just like to touch base that like the previous session, they were talking about more on only the data openness. I mean, obviously New Zealand has a data open policy, but that is not enough, I think, because internationally we are trying to promote a fairness, not the openness, which is like you need to make the data should be fungible, data should be accessible, data should be interoperable, and data should be reusable. And only that actually way you'll be able to make sure that actually you have a quite comprehensive database to utilize for your overall risk assessment. I would like to just hand it over to Tim and Berku to provide any comments from their side.
I was just gonna. I was kind of like nodding as you were kind of talking through Bapon. I think I tend to kind of like completely wholeheartedly agree in terms of really when we like taking a step back and looking at the sustainability piece as a theme. It's quite a multi-stakeholder game, and you kind of referred to kind of like investors. I've covered a little bit financial institutions. Even all of us in this call bring different angles or different kind of mindsets to the table. We have society, we have communities, we have clients, corporate, institutional, and so on, so consumer. So I think depending on the angle that everyone wants to kind of put in and just and see the change happening in their kind of field, the kind of the utilization, the kind of the need, how to leverage it will really differ. So I completely agree with you.
Look, I often think that when I see the weather forecast and look at 3 or 4 days out, that I think there's about a 50% chance that it's going to be right in 4 or 5 days' time. So in terms of the short term, what's going to happen in the next 10, 15, 30 days, no one really anticipated what would happen in West Auckland in the early hours of Tuesday morning this week. That's not to say that insurance is suddenly incapable of responding or incapable of meeting the impact of those events. We're regulated to certain standards for flood, 1 in 200 year earthquake, 1 in 1,000-year response capability, and solvency is under review over the next year or two as well, and will be better informed by better science in those areas as well. So yeah, it is there the capability to give us that accurate picture? We can get an indication that we may be facing a dry summer due to an magnified El Nino or La Nina effect, and we can anticipate potential short-term scenarios that may occur. And clearly where we get warning of a polar blast, we can take some adaptive measures to respond to that. But in terms of longer term resilience, we have a lot of incumbent property stock that people inhabit and businesses operate from right around the country that regardless of what happens, remain vulnerable and will become increasingly vulnerable unless we take that long view around how we address adaptation measures. And I think that's the more important question. It's not to say that we want fine predictability for the next month or two. I'm not sure we'll ever get that. We're always going to live in a very uncertain world, but it's how we manage that uncertainty and build greater resilience to respond to that. The second part of your question referred to sort of the openness and accessibility of data to inform key decisions, such as how do we make ourselves more resilient? How do we plan for the future? I know there are always challenges here, and I'm sure Ilan will be dying to jump in here around data accessibility from the insurance sector. I certainly do think our sector can provide more than it has done in the past in being able to give a better sense on an aggregated level that doesn't undermine the commercial sensitivity, privacy of individual property owners' data, and so it's got to be done in a safe space, that accessibility, but some aggregated data certainly could be more forthcoming in order to provide information about losses that could inform longer term resilience decisions. And I think that's something that's a work in progress for our sector, and hopefully we can do better than we have done in the past.
Ilan, did you want to add to that?
Yes, as Tim thought I would want to. About data and insurance, or even the banking sector providing data, these are commercial entities, profit-making entities, and their data is their main asset. So it's unreasonable to expect them to share data. Like there was a question in the chat about asking the insurance industry to share their risk models more thoroughly. I don't think that's a reasonable expectation from a private sector profit-making entity. What we need to request is that we have the capacity, because these are public interest data that we all need in order to make better informed decisions. We need the public sector to provide that data. And specifically in the case of New Zealand, we have these Crown Research entities, the CRIs, like NIWA or GNS, who have this mixed model where they are part public sector, but they operate like a private sector consulting entity. And because of that, they are unwilling to share a lot of their data, even when that data is paid for by the government. We need much more sharing of data between those entities, and all the data that the public sector produces to be publicly available, so that all the people, all the decision makers, and that can be a local in local government or in central government, have access to the up-to-date scientific information that can help them provide more useful decisions.
Thanks, Ilan. Tony, I see you have your hand up.
Yeah, kia ora. Just looking at what's happened over the last few months, with the legal system and the role that the legal system has had with businesses being challenged, like Shell by the Dutch government, or by even the Climate Commission has been recently legally challenged by the New Zealand Lawyers for Climate Change, Coromandel Council as well, and also Nelson Council challenged about the decisions that they have made. I just wondered what, from a business perspective, have you thought about the risk, or I suppose the opportunity in a way, that the legal system can help to really motivate businesses, organizations, councils, even governments to take a stronger role on climate change, both adaptation and mitigation? Any thoughts?
Well, yeah, absolutely. And the point I was trying to make in one of the slides I had was that for the insurance sector, we provide liability insurance for the likes of councils and others who may be responsible for leading to harm by not taking due action, appropriate action to reduce that harm in the face of the knowledge that they have about the onset of climate change. So from our sector's perspective, there are issues around whether or not and the extent to which liability cover is provided, and actually having to calculate for TCFD reporting purposes the liability risk that we face. Unfortunately, not unfortunately, it just happens to be a reflection of the early stages that we do not know, for instance, the kinds of actions and decisions that are being made by courts. We do not know whether the plaintiff will receive X amount of funding, X amount of an award or not. There's not enough legal jurisprudence in place at the moment for us to have a lot of certainty about the risks that we're underwriting in the liability space. But that's going to develop, and I think the extent to which insurers' policies in the future address climate risks and require that due diligence be done to address those risks in order to enable those liability covers to be affordable in the future, will be an interesting development over the years to come.
Thanks, Tim. I'm conscious of time, and we've got probably time for one more question. And I see there's some great questions there. And what we'll do is the panelists, as Tim has, will take the opportunity to respond to the ones we don't get to. But there's a question here from Kate to you, Elan, around the fact that you'd mentioned consumer choice and regulatory systems, which are key levers for change in response to climate change. How much confidence do you have in the effectiveness of regulatory systems, given the need to understand international supply chains and the power of lobby groups? The example given here is around dairy and influencing policy settings.
Well, one needs to be skeptical, and one needs to be watchful. There's definitely room for regulation that is counterproductive or not productive or even counterproductive. But that doesn't mean that regulation cannot provide useful service in the right direction. And liability as well. And as Tim was answering the previous call. So if there are a lot of parallels or analogies between the tobacco crisis and cigarettes, and the way we transitions from understanding that tobacco has all these adverse health consequences in the 1950s to the world today, where we have a very tight regulation on tobacco products. And the push to do something about that was very slow, but it came from two sources: liability, so court cases against the tobacco industry, and regulation. So there's no reason why we can't do the same thing, for example, for greenhouse gas emissions. So yes, we need to be careful, and we need to make sure that the regulation is designed well, and it doesn't become just greenwashing. But that doesn't mean that that can't be done.
Great, thank you, Elan. Well, look, with that, that wraps up our session. And so I would like to extend the thanks to my fellow panelists for participating in an insightful and putting some challenges out there in terms of taking us forward on this topic, and also to all the session participants who have been joining us over the course of this session. And thank you for your questions. Tony, I'll perhaps hand back to you. Thank you for having us.
Yeah, well, no, saying thank you very much. Thank you all for being here, and just giving the next session a plug, of course, which is the closing session. We've got the Mayor, I think, invited to come along and talk to us about the commitments Christchurch City Council is making in this area, and I'm sure there's some other speakers lined up. So that's back in the main room. But then after that, of course, we've got the sector breakouts. So we're happy to meet as sectors: government, business, community, youth, education, and Indigenous or Māori groups can meet, and just really, it's a bit like having a beer after a conference. You know, let's get together and have a wee chat. Let's sit down with some cheese and crackers and and just catch up with people and make some connections across New Zealand and share about some of the things we've learned today. So again, I want to thank you all very much for your attendance today, and I look forward to seeing you in the main room in about an hour's time. All the best. Kia ora.
Thank you.
Thank you.
Ngā mihi nui.